The Morgan Report with David Morgan.
David Morgan with you with the weekly perspective for the week ending June 5, 2020. Well, we'll start off with the landing page here on Morgan Report and remind everybody that you can get on the Money Show virtual event. It's on the web. It's Wednesday, the 10th of June. It will be David Smith, who's been working with us for a very long time. And there are, of course, lots of other speakers and people that anyone in the resource sector or the general equities market might be interested in. Further, if you're not signed up for a free list, please consider doing so. With that out of the way, I am going to start with the stock market as I always do. I'm going to be very brief today, and that is that the NASDAQ just made a recent high, and there's no divergences. The volumes are good. Everything that indicate that it will continue is there. So I expect to see the stock markets, basis the U.S., going up further. At the same time, I've been calling for a pullback in the gold market now for a while. And as I'm making this video, gold is off rather substantially today, as well as silver. I think platinum is down, and I think palladium's up slightly. I do have a target that I won't give for the general audience because people pay me for our work and thoughts. But nonetheless, it's not there yet. I do expect gold will be lower over time, and I have given some good entry points in the portfolio for our paid members. Further, we did do a speculation in the last report that was issued last weekend, and it's not a suggestion yet. It's just too tiny, but it's from a basically betting on the jockey kind of a situation. It's someone that met me very early on in the sector, thinking that all I did was silver stocks, which of course isn't true. We've done everything, but regardless, it was a silver company. At the time it was around 12 to 25 cents. I forget the exact price, but eventually went on to $12. Same people. I'm not saying it's going to do the same thing. In fact, they are very undercapitalized. It is a company and it's valid, but very, very tiny. But I like to get these things out in front for our subscribers that have aggressive accounts on these very, very difficult speculations. Speaking of which, I'd like to go into that a little further. So we do take 2 questions maximum per month on our paid subscribers, and one asked basically about this company. I'm just describing in a very vague way, and the way he described it, I'm not certain that it's the one that we had just written up, but regardless, we did give him some direction on that, and this was from one of the staff members, not me, that wrote this, but he did say in the name of this person, there's no need to dig deeply into the weeds in order to find a quote-unquote unknown gold or silver company that claims to unearth generational wealth for shareholders. Follow the TMR process as outlined in the asset allocation tables and the information on how to use the Morgan Report. Not to say stick with just our tables. And he works with me, hold a number outside that we don't track in TMR. Just remember that most explorers will always be that. Invested money that doesn't go anywhere. Dead money. And money that goes away. It's just that. Once in a blue moon, an outlier, explorer hits something big. But that's 1,001 shot, and actually it's about a 4,001 shot, but you get the idea. If a big name who's done it before, and we've named several of them, is behind it, the odds are better, but never a guarantee. There are plenty of quality companies out there, and plenty more that are never going to hunt. Study deeply to discern the difference. In a bull market run that's developing, it will help your efforts to become much more than an average investor or feel that you are left behind. So I want to read that out. I think it's important, especially at this phase of development with the whole mining sector. Big money and big companies still applies, probably will through the entire move up. But as the sector gets more and more heated and finally into that overheated mode, which I don't see for a while, that's when you can really do well by speculating in these small caps. Not to say that having a handful of them well selected right now isn't a good idea. We do have, I think, 5 or so in the Morgan Report, but these are, again, bet a little to win a lot situations. So enough about our philosophy. Let's get on to the pertinent financial news. So first up from Reuters, Gap, which is a clothing store, records a nearly $1 billion loss on store closures. I won't read the whole thing. I think the headline is sufficient. And of course, it's print worldwide. It's not just the Fed. CNBC reports European central banks takes its pandemic bond buying to 1.35 trillion euros to try to prop up the economy. And not to pick on just Europe and the U.S., let's go ahead and get Japan into the act. This is from Bloomberg. Japan's ramped up support for its economy is likely to require a third extra budget to help plug a record hole between surging spending and sliding tax receipts. You can see from this graphic here, it's gone parabolic, just like everyone else. And for my friends from down under, not to leave you out, this is from AP. Pandemic brings first Australian recession in 29 years. Hard to believe. I know you guys have multiple bubbles, especially the housing bubble, from my understanding. And it's just pump until the balloon bursts. And I think it has. And not just in Australia. I'm trying to give equal airtime to everybody. It's just the same scenario no matter where you are. The idea is let's just go ahead and pump up the bubble until it bursts. Well, we know our lives have changed in almost every aspect you care to name: entertainment, sports, airline travel, vacations, automobile travel, everything. So this is a Reuters article. U.S. Airlines gained final approval to drop services to 75 domestic airports. And for those that don't know, and I think most of you do, I do quite a bit of air travel. I don't know how much more flying I'll be doing in the future, but I do know that it will be reduced from what it has been in the past. Reuters, 15 U.S. airlines were granted final government approval on Wednesday to temporarily, remember that word, and there's nothing more definite than temporary, halt services to 75 domestic airports as travel demand has been crushed due to the CV pandemic. This is another headline from Reuters. UK leads fall in global trust in government, according to a COVID poll. People across almost all the world's leading rich economies have turned more skeptical about their government's handling of the pandemic, with confidence slumping most in Britain, according to a survey on Thursday. In May, in the group of 7 nations as a whole, 48% of respondents approved of how the authorities had handled the pandemic, down from 50% in April. Basically, this is worldwide. Just about I won't say just about everybody, but a vast majority of people, regardless of what stripe they are, meaning what political persuasion their country adheres to, have given up pretty much on government's ability to do almost anything on the truth meter other than peg it to the negative side. I know this is going to be tough to see, but I'll know a lot of you just listen to the audio portion of these weekly perspectives. This is from the Atlanta Fed, and you probably can't see this graph very well, but basically it shows what their blue chip consensus is for GDP, gross domestic product, in the United States. And if you follow this green line where my cursor is now, it's showing down about 50%. This is the Fed saying this. We are in a situation, as we all well know, that things are contracting rapidly, won't be the same, lots of adjustments and a big reset. I think I'll spend a little more time there and then wrap up a little bit with the metals. Well, if you want to get a good picture, sometimes it's right out in the obvious. And this is from the World Economic Forum, and it's titled The Great Reset. And I'm not going to play it on top of my video. It'll probably get blurry, but nonetheless, you might consider that this weekend. Just go to or type into Google World Economic Forum Reset. You'll get this. You can watch this video, and it's actually pretty accurate. Basically, what they're telling you in your face is that don't let a good crisis go to waste. There's going to be a reset. We are the social engineers. We know what's best for you. We're going to control everything you think, do, and say, everything you basically can do or can't do, how you have to think. and on and on. And if you think I'm exaggerating, then you probably haven't done enough homework yet, because things definitely have changed, and they were changing for a very long time. And I will leave it at that. You can take this. In fact, I encourage everybody, especially those that are in the alt media, to probably take the time to watch this video, read this if you haven't already, and perhaps use it in some of your updates or some of your videos in the future. It's pretty obvious that the planners have planned this out for quite some time. It's not a coincidence. It's not a set of random events. It's something that has been orchestrated. Okay, I'm going to do something a little different. I'm going to do something for the public domain here that I do for my paid subscribers. Not to the in-depth level I usually do for them, but kind of give you an idea. So we're looking at my personal stock charts subscription, and you could get a lot of this for free on stock charts, by the way. So you wouldn't need to subscribe to get the chart I'm showing you right here. As you can see from my cursor, we're looking at a gold bull market that we have seen for a very nice long uptrend from basically 2000 to 2011. And for 11 years, year over year, gold was up. So during that time frame, there were a lot of gold bulls. A lot of people made money in the market. And then, of course, what happened was this big, basically cup formation that's taken roughly 7 years to get back to a level where we're at right now, which is pretty much near the high, as you can obviously see. And so now the question becomes, are we going up into the next leg up? And I would suggest strongly that we are. That doesn't mean immediately, and I'm going to drill in on this chart a little finer and give you some nearer term thoughts on the gold market. Okay, so I have been giving, the information to our paid members about my thoughts on the precious metals, and my thoughts have been, obviously here in the chart, that we are in a high-level consolidation somewhere between 1760 and 1680 on the continuous contract. Also, I noted that the volume has been tapering off relative to what it was back here in March, where we got this big downdraft, temporarily broke through the 200-day and the 50-day moving average, and then came right back up. And there was a lot of panic selling at the bottom. We said, hold, do not sell, hang on. And obviously, it took some trading sessions, but not that many. We're basically right back up from whence this decline started. And now we are consolidating above that. I have said, based on the indications that I use, that I expected to see the gold market sell off, which we're seeing today. Does it make me right? No, one day doesn't make a market. And I do have a target for a first level test of the gold market. And you can probably see from the lines I drew, it's probably pretty close to what I told everybody. But this is a daily chart. I don't always use a daily for those type of updates. Sometimes I use a weekly. Nonetheless, you've got the idea. So there's certain parameters that we look for. I do have entry points on almost all the stocks that are in the portfolio that are at a good buying zone, which is lower than where they are right now. And I think that's about all I want to say. I don't have a target on silver. Silver's been doing relatively well to the horrible performance it had in the beginning of the year, hitting 12 intraday on a paper market. But nonetheless, it's showing strength, and the gold-silver ratio has dropped from the 125-ish to 100. But I'm not going to be happy until we get down to the basically 70 gold to silver ratio. What's interesting is there's two ratios, really. I mean, there's the paper ratio, which you get from the CME, the CFTC, the Kitco print or whatever, which is valid. I'm not saying it's invalid. And then you get what I call the retail ratio, which what it costs for a gold eagle versus a silver eagle. And you do that division, you're going to find it's around 70, or a gold maple leaf and a silver maple leaf. And you do that division and you find again it's around 70. So it's kind of interesting what's going on in the metals markets right now. There certainly has been a fall off in the paper markets, as you can see with my cursor here. I'll just draw it here. So here was big volume in this area here. Of course, the gray indicates an up day and the red indicates a down day or days. But since this big buying, big selling here took it down, as you can see from the red, and then above average buying took it back up. And since then, it's been pretty much even Steven, actually average or below average volume, as you can tell from over here before this big run up and down that took place. That's the average volume there. And just come over here and say, what's really going on? And volume is really key in technical analysis. Not too many people stress it probably as much as I do, but nonetheless, it's there for everyone to see that wants to see. And again, I'm looking for a lower gold price temporarily. Overall, longer term, I am bullish as can be. As you can see for yourself, we are below the 50-day moving average right now. And the 200-day moving average, the 200-day moving average, I misspoke, sorry. And the 50-day moving average. No, I did have it right. Jeez, I'm sorry. It's a long day. Anyway, the moving average for 50 is 1708. We're right in that level now. And then the 200-day moving average is 1574 right there. And of course, we're not even close to that. I don't really expect to see that kind of a retracement at this point in time. So that's going to do it for this weekly update. I'll leave it there. Remember, there's nothing more powerful than the truth. Certainly, it is the time for all of us to speak the truth to each other, maintain our kindness. I'll be back with you next week for another weekly perspective.